everyone. My name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, what's driving the markets today?
Well, we are experiencing actually in the early European session a certain market sentiment reversal. It was characteristic how the tensions, or if you prefer, the escalation of the tensions in the US-China relationships have affected the market. We have to note here that US House Speaker Nancy Pelosi is about to visit Taiwan. She will be landing in Taiwan, I think, today. And tensions are running high. The Chinese are considering the island as Chinese, and on the other hand, the Americans seem to be supporting the notion that Taiwan is independent, despite not being recognized. But it's, leaving politics aside, it's a big issue about the markets, and should the tensions be maintained, we may see market wars intensifying, which more or less could provide support for safe havens, while riskier assets such as stocks or even commodity currencies could be weakening. And speaking about commodity currencies, we have to note here that they also dropped during today's late Asian session as RBA delivered its interest rate decision. Now the bank had delivered a 50 basis points rate hike as was expected. We had mentioned it yesterday as well. However, in the accompanying statement, the bank mentioned that it's not on a preset rate hike path. And practically the width of future rate hikes, also the frequency of future rate hikes, will be data dependent, especially data regarding inflation, consumption, and employment. So practically we have a slight degree of uncertainty being inserted by the bank in their accompanying statement, which more or less tended to disappoint Aussie traders. And it was characteristic how the Aussie dropped against the US dollar at the time of the release and about half an hour later. Now, should market expectations, hawkish expectations, practically be disappointed to a certain degree, we may see monetary policy outlook of RBA easing and practically weighing on the Aussie somewhat. At the same time, the tensions in the US-Sino relationships, which we have mentioned before, could weigh on the Aussie further, given that the Australian economy is closely linked to the Chinese one, as it exports a high amount of raw materials to China. That would be the second issue. The third issue, which we have highlighted in the fundamentals, would be there seem to be some market worries once again for a possible global economic slowdown. And I would note that we had also the ISM manufacturing PMI figure from the US yesterday. It was for July. Now, the figure dropped, maybe not as much as expected, but still it showed a slowdown of economic activity for the manufacturing sector of the US. And that tended to support the idea that we may be heading towards that direction on a global level as well. Also, don't forget that China's manufacturing PMI figures on Sunday and Monday's Asian session were actually somewhat adverse. And as the figures dropped and showed a slowdown, even at some point a contraction of the economic activity of China's manufacturing sector, and that more or less, in combination with the US data, may have contributed to that sentiment.
Which earnings reports would you highlight for today?
Well, US stock markets, it's true, they still have their earnings season on. I would be noting definitely Caterpillar, Airbnb, and I would also be interested in PayPal. PayPal is a stock which had been weakening and it's very, very interesting. Other than that, maybe Starbucks. those four I would single out because we have a high number of releases. Other than that, though, US stocks could be influenced by the market sentiment mostly rather than earnings. It's going to be a battle between the two. Should the market worries intensify, especially about the US-China relationships and the possibility of a global economic slowdown, we may see stocks weakening. It should be noted that during today's Asian session, we had all three major stock indexes, that would be the Dow Jones, S&P 500, and NASDAQ dropping after 4 consecutive days of winning. So we may be seeing a holding of the rise of US stock markets. However, that remains to be seen, especially in the American session today.
And what's on the calendar for the day?
Well, we have a number of financial releases. I would be noting from the UK the nationwide house prices growth rate. Should we see an acceleration, we may see the pound getting some support, as should prices be on the rise, that would be implying also a great demand. And the real estate sector in the UK is quite important. I would be noting also from Switzerland the manufacturing PMI. That would be for July. A possible rise of the indicator could imply practically a fast expansion of economic activity for the Swiss manufacturing sector. In the American session, we have the JOLTS openings. A drop is expected, which is not exactly positive for the US dollar. Mind you, though, that JOLTS openings are for June. Later on, we have also from the US, it's just before the Asian session starts. Oil traders may turn their attention towards the AP weekly crude oil inventories figure. Now, should there be another considerable drawdown, mind you that last week's drawdown was at around minus 4.7 million barrels. Should there be another considerable drawdown, we may see oil prices getting some support, as that would imply practically a tight US oil market. Now, moving to the Asian session tomorrow, would definitely highlight New Zealand's employment data. Now, the unemployment rate of New Zealand is expected to tick down. The job growth rate is expected to accelerate. And we have also average earnings growth rate, which is also expected to accelerate. All of them are for quarter 2. And that would be showing us that A, the New Zealand employment market is still tightening. The acceleration of the job growth rate would be implying practically that the employment market in New Zealand has the potential to tighten even further, while the acceleration of the earnings growth rate would imply that the employment market in New Zealand is still feeding inflationary pressures within New Zealand's economy. So practically such employment data would be allowing RBNZ, which has a dual mandate to watch over inflation, keeping prices rather stable, yet at the same time maximizing employment, to maintain its rate hiking path, probably delivering another wide rate hike in the next meeting. Other than that, I would be noting practically, now we have from Australia retail trade, that's also for quarter 2. Should we see an acceleration of the growth rate of retail trade, that would be implying a greater degree of consumption within the Australian economy and could provide some support for the AUSSIE.
And what about the monetary front?
Well, we have 2 speakers scheduled for today, and the first would be in the American session. That would be Chicago Fed President Evans. I would also be noting St. Louis Fed President Bullard, but he'll be speaking in the early Asian session tomorrow. Bullard is leaning more towards the hawkish side. So should we see comments more or less supporting the notion of a quite fast monetary policy tightening on behalf of the Fed, we may see the US dollar getting some support here. Chicago Fed President Evans in the American session today usually is more Fed centrist, yet we may see some hawkish opinions here as well.
And how about the oil prices?
Well, oil prices dropped yesterday, but I would dare to say that up until the Asian session, the drop was still in the boundaries of a WTI sideways movement. So WTI as such, I would like to see a wider drop to start considering a possible bearish scenario here. The fundamentals behind it were related with the market worries about a possible global economic slowdown, which could have also an adverse effect on the demand side of oil. So should the worries intensify, we may see oil prices dropping even further.
Is gold still on the rise?
Yep. Gold was on the rise in the past 4 days and practically fueled by USD's weakness. Now, should we have a market reversal today and should the US dollar start to strengthen, then we may see that upward movement of gold's price to be under threat. On the other hand, should US dollar continue to weaken, we may see that allowing gold's price to ascend even further. So overall, we would be highlighting the negative correlation between the two trading instruments, namely gold and the US dollar. Should the US dollar continue to rise, we may see, continue to drop, we may see gold's price rising and vice versa.
Any final comments, Peter?
Mostly, I would be highlighting once again the American Open. I would like to see how the fundamentals, because we have conflicting fundamentals here, are going to be playing out, especially in the US stock markets. Should the interest of traders be more on the earnings reports, that's one story. Should, on the other hand, market worries about the possible global economic slowdown or even the tensions in the US-China relationships practically move the markets, then we may see US stock markets starting to drop.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. Now, we're going to be focusing mostly on the US dollar, which is also the USD index for our chart you have in the screens right now. Please note that all the charts which are to be presented, unless otherwise stated, are to be for our charts timeframes. Now, we have also US stock markets and gold. Other than that, we will be taking a quick look also on the Aussie and JPY. For the time being, let's make a start with the US dollar index. We have an interesting development on technical level. Note how the downward motion of the US dollar index practically seems to have hit a hold on the upward trend line. And drilling out to the daily chart right now, this movement has been practically since the 10th of February. See how it has been rising, and now it's bouncing exactly on this upward trend line. Let's drill back down to the 4-hour chart. Now, the downward trend line, which has been guiding it since the 27th of July, seems to have been broken. So we would switch initially our outlook in favor of a sideways movement. I would like to see, though, how this will be playing out. it's an interesting moment. We're at the crossroad practically for the US dollar index. On the one hand, we see that there was a bounce of the upward trend line, and on the other, that there was a breaking of the downward trend line. So for the time being, we tend to maintain a bias for a sideways motion, yet it could alter its direction at any given moment. On the other hand, I would like to note here that the RSI indicator, despite rising, approaching the reading of 50, it's actually right now at 41. It's still below the reading of 50. So the bears have not exactly left the scene. They're still somewhat present. It's a battle. It's a battle, and for a bullish outlook, I would require clear breaking of the 105.90, and for the index to start actively aiming for the 107.20. For a bearish outlook, or if you prefer a renewal of the bearish outlook, I would require clear breaking of the prevention upward trend line, and possibly for the index to start aiming, if not even testing, the 103.45 support line. A stabilization is also possible, which is our initial reaction for now, but once again, the direction could change at any given moment. But should the stabilization prevail, we may see it remaining below the 105.90, maybe even correcting a little bit lower. Note the lows here and here. So I would expect it to remain somewhere in this area. A possible breaking of the prementioned upward trend line is also possible and would be signaling a trend reversal. Okay, let's have a look now at, let's make a start with S&P 500. S&P 500, which was on the rise, breaking the 4,075 and seemingly stabilizing above it. Note how the RSI indicator is dropping, aiming for the reading of 50. And should bearish tendencies prevail, we may see the price action of S&P 500 breaking the 4,075 and start actively aiming for 3,950. Such a movement would practically drive the RSI indicator lower, breaking possibly the reading of 50 and start actively aiming for the reading of 30. On the other hand, should the bulls take over once again, we may see the price action aiming, if not even breaking, the 4,205 resistance line. A possible stabilization could occur, and that would be in the current levels just above the 4,075 support line. Okay, let's have a look now at NASDAQ, or even better, Dow Jones. Note how similar the picture is with Dow Jones and the S&P 500. This bell here is very, very interesting. In this case, though, the picture is clearer. Dow Jones has hit the ceiling at the 32,900 resistance line and seems to be correcting lower for now. We have a similar movement of the RSI indicator, implying that the bulls are losing substantial ground here, as the RSI is aiming for the reading of 50. Should the bears take over, I wouldn't be surprised to see Dow Jones once again aiming actively for the 31,955, if not even breaching it. Okay. Should the bulls take over, we may see a reversal here, and the price action rising, breaking above the 32,900 resistance line, and start actively aiming for the 33,470. Let's have a look how valid this resistance line, if it's valid still. Yeah, it is. So we had a validation, and that was when, let's have a look again, on the 30th of May, while R1 32,900 seems to be validated by yesterday's price action here. So it's going to be quite interesting. Should the bulls once again take the reins, I would expect nothing less than breaking of the 32,900 and actively aiming for 33,470. Let's have a look at US 500. Once again, similar picture, some stabilization, the same bell, and we have seen that the price action has broken the 4,075 and seems to be stabilizing. Once again, the RSI indicator is dropping substantially, aiming for a reading of 50. Actually, it's currently at 56, which is quite near. A bearish outlook could occur in case the price action of Nasdaq breaks the 4,075 support line and starts actively aiming for 3,950. On the flip side, we may see the price action bouncing on the 4,075, yet remaining with low volatility around here. That would be implying a stabilization of the index. A bullish scenario could occur should the index start to rise, aim for the 4,205, and possibly break it. I would require clear breaking of the R1 for a bullish outlook. Let's have a look at gold as well. Gold, which despite the correction during today's European session, seems to maintain its upward motion. And as long as the price action remains above the upward trend line, which was initiated practically on the 27th of July, we tend to maintain our bullish outlook. In which case we may see gold's price actually marking new higher highs, aiming for the 1790 resistance line and possibly breaking it as well. Such a move would be not unusual for gold. On the other hand, the stabilization could occur should the price action break the upward trend line. Let's extend a little bit. We extend it here. Now, should the price action break this and respect the 1763 support line, we may see a stabilization of the precious metal. On the flip side, a bearish outlook, we would require a clear breaking of the pre-mentioned upward trend line, a clear breaking of the 1763 support line, and for the shiny metal to start aiming actively for the 1740. On the other hand, we have to note here that the RSI indicator seems to be stabilizing, yet remains close to the reading of 70. So the bulls are still present. Once again, bearish outlook for the time being does not seem to be probable, but I would like to see how the American session will be open. For the time being, we tend to maintain our bullish outlook as long as it remains above the upward trend line noted before. Let's flip over now to the FX market. We make a start with JPY, USD JPY, on a clear downward motion, breaking the 131.50. And let's make the necessary corrections. The 131.15, given that the price action has broken below it, excuse me, is now being turned into a resistance line. Let's color it in red to avoid any confusion. And we have support line at 126.34. Let's have a look at this. This must be pretty old. Yeah, there's a touch here. So we have two touches of support line. One is here. The second is here. It could move a little bit upwards. 126.50 maybe. Yeah, that would be now a resistance line here and a support line here. Keeping this one. Yeah, I'm keeping this. Okay, let's make the necessary corrections on the labels. Rearranging them first so that they get just above the levels they're related to. Let's correct the scripts, and it would be at 100. The R3 would be placed now at 134.70. The R2 to be placed at 133.15. The R1 being placed at 131.50. The S1, the first support line, being placed now at 129.60. Second support line being placed at 128.30. And the final support line being placed at 126.90. Small typo here. Okay. So, USD JPY in the past 24 hours has continued its downward motion. As you can see, it has broken below the 131.50 support line, now turned to resistance, given that the price action is below it. The break was clear, and there are some slight signs of stabilization for the pair practically in the European session. For the time being, we tend to maintain a bearish outlook, and we maintain it as long as the price action remains below the downward trend line, which was incepted since the, let's have a look, 27th of July. Should the bears actually maintain control over the pair, we may see it breaking the 129.60 in the next 24 hours and start actively aiming for the 128.30. On the other hand, we note the stabilization which has been taking place here, the European session. And should that be maintained, we may see the pair breaking the mentioned downward trend line, yet respecting the 131.50 resistance line and the 129.60 support line. In the case of a bullish reversal and for a bullish outlook, we would require definitely a clear breaking of the prementioned downward trend line, a breaking of the 131.50 resistance line, and for the pair to start actively aiming for the 131.3.15 resistance level. On the other hand, I have to note here that the RSI indicator below the 4-hour chart is at the reading, is below the reading of 30. Actually, it's at, let's have a look, around, okay, that's pretty low. Okay, that's a 21. And on the one hand, this underscores the dominance of the bears for USD/JPY. On the other hand, though, it may also imply that the pair is at oversold levels and may be ripe for correction higher. So a possible correction higher should not take us by surprise here. You can see that there was a similar movement right here. And it was at the point where practically the RSI indicator was at similar levels as it is today. On the other hand, note how beautifully the price action has been running along the lower Bollinger Band. And there is still some room here. so the bears could move lower. For a bullish scenario, once again, the indicators do not seem to suggest this. So I would expect, once again, a bearish outlook to be the predominant one for USD/JPY. Let's have a look now at the second safe haven pair, that will be USD/CHF, and a similar picture, but we have to note here that the pair is fooling around with the downward trend line, which was incepted since the 14th of July. Let's make the readjustments necessary, repositioning the labels. It's important that you place the labels directly under the resistance to support line so that you have practically an instant view of what is what. What I'm worried here is this resistance line. And I would lower it to this level to get these touches here and here and here. That would be the 0.9730. Yep. Note how the RSI indicator practically rose after being on the third level for a period, and seems about to start aiming for the reading of 50. That could be implying some stabilization. We're going to have to wait and see here. For the time being, we maintain our bearish outlook. Despite its correction higher during today's late American and Asian session. Actually, it's the Asian session and early European one. We see that the price action of USD/CHF has been respecting the downward trend line guiding it since the 14th of July. And as long as the price action remains below the downward trend line, we tend to maintain our bearish outlook for the pair. Should the bears actually maintain control, we may see USD/CHF breaking the 0.9455 and start actively aiming for 0.9375. On the other hand, should a stabilization be present, we would expect the price action to break the downward trend line, yet remain between the 0.9550 resistance line and the 0.9455 support line. Last but not least, should the bulls say enough is enough and take over, we may see the price action rising, breaking the pre-mentioned downward trend line. We would require a clear breaking of the 0.9550 resistance line, and for the pair to start actively aiming for the 0.9640 resistance level. Nothing less. Okay, let's move now to commodity currencies. We make a start with the Aussie, which had also RBA's interest rate decision. Whoa, that's down. That's down. Okay, let's make the necessary adjustments. We have a number of observations here. A, the price action during the late Asian session today and early European session today was clearly not in the Aussie's favor. On the contrary, the Aussie paid dearly here, and the downward trend line has been broken. Let's make some readjustments. This will be turned into a resistance line. Touches here and here. Now this mid-level, going to be correcting it a little bit lower, somewhere here. Nice touch here, 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 here. Resistance level here, support, support. So that would be 0.6915. We're going to be readjusting also this level, slightly lower. So we have the touches of the resistance level here, support here and here. And that would be the 0.6860. Yep. And the 0.68 remains. Touches here and here. Okay, let's keep this. Let's make the readjustments. 0.68. 0.6860. 0.6915. 0.6980. 0.7070. Now this one will have to go lower. And I would recommend this peak here, which was formed yesterday practically. That would be the 0.7045. And the final resistance line. Okay, this can get out of the picture. I would be placing it somewhere here. Note the peaks here and here. Yep. On the other hand, you could place it here, where it was as a support line. But the price action seems to be getting lower and lower, so I'll keep it here. And that would be the 0.7135. Adjusting 0.7135. So let's have now the discussion about AUD-USD. AUD-USD has been dropping since the late Asian session today due to RBA's interest rate decision. The pair's price action has broken the upward trend line guiding it, and that was since the 21st of July. Yet seems to be respecting the 0.6915 support line, at least for now. The RSI indicator has dropped below the reading of 50. Actually, it's pretty near to the reading of 30. It's at 38 right now. We may see some continuation of the bearish movement, in which case we may see AUD-USD clearly breaking the 0.6915 and actually start aiming for 0.6860. But I think we should allow for AUD-USD to recover somewhat after a wide drop. Stabilization in this scenario could also play out, and I would expect it to remain between the 0.6980 resistance line here and the 0.6915 support line. Should a stabilization occur and the bulls find a chance to renew the dominance over AUD/USD, we may see the price action stabilizing somewhat and start rising, breaking the 0.6980 and start aiming for 0.7045. Definitely though, we would require clear breaking of the R1 for a bullish outlook for the pair. Okay, let's have a look now at USD CAD, the other large commodity currency. The price action has broken the downward trend line guiding it and the 1.2825 resistance line, which is time to be switched towards the support line. And we are hunting now for a new ultimate resistance line, definitely somewhere here. Yeah, on the peak. $1.3220. Let's widen this. Let's readjust the labels. Okay, I see that some of you guys are interested in USD TRY. If we have some time, we could have a look later on. And 1.2845, 29.45 would be the first resistance line. The first support line is now being the 1.28. Let me have a look again. Second support line being placed at 1.2720. And the final support line being placed at 1.2610. Okay. So, USD CAD on the rise, has broken the downward trend line guiding it. That was since the 25th of July. So the bearish outlook for USD CAD has to be abandoned. For the time being, we tend to maintain a bias for a slight sideways movement, possibly between the 1.2945 resistance line and definitely above the 1.2825 support line. We would expect, though, that should the bears regain control over the pair, USD CAD to drop, breaking definitely the 1.2825 support line, and start actively aiming for the 1.2720 support level. On the flip side, given that we have an RSI indicator which has been on the rise, it has broken above the reading of 50 with an upward slope, so the bulls may maintain some control here. I would expect USD CAD to reach, if not even breach, the 1.2945 resistance level. Such a movement could also allow us to draw an upward trend line and show the limitations of the upward movement of the pair. For the time being, though, I do not have enough data for that. For the time being, I would stick for the sideways movement. Note how the price action of USD CAD has reached the upper Bollinger Band, which could be slowing it down a little bit. On the other hand, though, the 100 moving average has dropped. It seems to be running along the 200 moving average. For me, that's not convincing enough for a bearish outlook. Okay, let's have a look at the second, third commodity currency pairs. That would be NZD-USD. NZD-USD, which has been dropping and has re-entered the 0.6290 and the 0.62 level range. The upward movement of the pair has been interrupted. You can see it here. So we switch our bullish outlook despite having higher truths, higher peaks. Now with the correction lower, it could also be a shift. Let's drill to the 1 hour chart. Oh, that's a different picture, isn't it? That it could actually be a shift. Okay. Now, what's the story here? The story would be practically that should there be a shift in the upward trend line to the right, that would imply practically that the price action is to regain its upward movement, possibly breaking above the 0.6290 and start actively aiming for 0.6390. Why? Because for a bullish outlook, we would require the next peak to be higher than this one. So it would have to be between this level and 0.6390 or even higher. Let's have a look. Definitely between the 0.6350 and the 0.6390. Let's set this as a mid level. On the other hand, should a stabilization take place, given that the RSI indicator dropped and is now currently at the reading of 50, implying a rather indecisive market, I wouldn't be surprised to see the price action breaking the pre-mentioned upward trend line and practically revolving around or being just below the 0.6290 resistance level. A bearish outlook could occur should the price action break the pre-mentioned upward trend line, and definitely would require a testing, if not even a breaking of the 0.62 support line. A movement which is easily within NZD-USD's grasp. Let's have a look now at USD-TRY. It's a weekly chart. Let's drill down to the 4 hour chart. Here it is. And we can see that the pair has been on the rise. It's definitely above the reading of 17.60, which used to be a resistance line. And we see a right-hand shift of the upward trend line. Let me correct this. There you go. Touch, the start, a touch, and it's currently testing it once again. Note how the pair though failed to create higher peaks. And that could be an indication for a stabilization for USD/TRY. Let's have another look at the weekly chart. Yep, note this peak here. It signals this practically how important the 1832 is. That's the highest level of the chart. We maintain our bullish outlook for USD/TRY. And should that be maintained, we may see the price action continuing to aim for the 1832. That should be it for the day. Thank you very much for watching. Hope you found it useful. From all of us here at IronFX, best wishes for solid trading.
Everyone, my name is Emily and today we're going to talk about currency pairs. In this video, we will look further into how currency pairs work. In the foreign exchange market, currencies are always traded in pairs. This happens because traders, when they purchase or sell one currency, and at the same time, they can buy or sell another. Choosing which pairs to trade mostly depends on your level of experience. However, the most appropriate time to buy or sell a pair will mainly depend on each currency's exchange rate. Now, each currency consists of a base currency, which is the one on the left, and a code currency, which is the one on the right. Remember that traders always buy or sell the base currency. So taking the euro against USD pair as an example, if its price is 1.4500, this means that 1 euro can be exchanged for $1.45. Based on this example, the euro is the base currency, whereas the USD is the code currency. There are different types of currency pairs. The majors are considered the most dominant currency pairs. They all include the US dollar. In fact, these pairs are the most traded forex pairs around the globe. There are three main reasons for this: high liquidity, tight spreads, and low trading costs. Another example of a major pair is the GBP against USD. The second type of currency pairs is called the minors or cross-currency pairs, and these are non-USD pairs. Compared to the majors, they have lower market liquidity and wider dealing spreads. Nevertheless, they also offer trading opportunities. Euro against GBP or GBP against JPY are examples of minor currency pairs. Finally, we have exotic currency pairs, which include a major currency pair and the currency from a developing economy like Mexico. GBP against ZAR or USD against MXN are exotic pairs, for example. Exotics usually have lower liquidity compared to the other two categories, increased volatility and higher trading costs. Being extremely volatile, however, can potentially generate opportunities, but there are always risks involved. If you are well familiar with the market and have some years of experience, exotic pairs are for you. Hope you now have a better understanding of currency pairs. Thank you so much for watching. See you tomorrow. Bye-bye.
Okay, all right. I see a couple of you guys streaming in, Natalia, Marky, Joffrey. Nice to see you guys here, nice and early. Right. It's a fun session today. It's a fun session today, guys. I want to encourage you to we have a chat panel over here, right? So we have a chat panel which you can try to use. Hey, good day to you too, Joffrey. Right. Yeah. So yeah, there's a chat panel, right? I'm not sure if you guys can see it, right? So yeah, you can just send your messages, send your questions in there, right? Just let me type to everyone. Yo. All right. Yeah. You can send your messages there. Right, that is the place where I can not only your messages but your questions, so that I can answer them along the way. Right. Today will be a pretty exciting topic. Right, it's on support and resistance, which forms the foundation of all of our trading strategies. Right, support and resistance. Right. There are the right ways to do it, and there are the wrong ways to do it. Right. So in today's session, we're going to show you some of the ways that I've used over the years, right, to trade very profitably, right, in combination with a couple of like other forms of analysis. But support and resistance by itself is always my main one. It's always my my go-to approach, right? So I need good support and resistance before I can even trade. Okay, nice to see you tune in, Edwin. Right, welcome to the webinar. Right, welcome to the webinar. Right, so yep. Once again, I want to encourage you guys, anytime you got questions, just send it in. Send it right through. I'll do my best to answer them. Okay. Now let's begin today's session. Right. So as usual, right, this webinar is brought to you by IronFX. Right. Couple of things that you need to take note is this, of course, is the risk warning and the disclaimer that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. Okay. Now, I think I can still see a couple of people streaming in, right? And yeah, let's begin. Let's begin. All right. So for those of you guys who are here for the first time, you might be wondering, who is this dude over here, right? Who is doing the webinar, right? So this is a younger version of myself. My name is Desmond Leong. I'm an external analyst over here at IronFX, right? So I also run the award-winning research firm Everest Fortune Group, right? So we are Best FX Research 2019, 2020, 2021, and finalists for Best Equity 2020 and 2021. Strong team of traders, strong team of prop traders, right? So if there's any word of encouragement I share with you guys is that I'm a young guy, right? I'm just barely 32 years old, right? And I trade full time, right? So I want to encourage you that, you know, you don't need to be 30 years in Bloomberg or 30 years in trading to be a good trader. You just need to learn the right stuff, right? Learn the right stuff, you can be a good trader, right? So that's what we are dedicated to bringing you here at IronFX. You know, we're going to bring you the highest grade education. I would dare even say institutional grade education, stuff that you don't find on Baby Pips, stuff that you don't find on Forex Factory, right? So my research firm, you know, we usually advise the banks, the brokers, the hedge funds on where the markets are heading, right? But we have this special partnership with IronFX to bring you guys the good stuff, or the stuff that will take care of trading really to the next level. Okay, so take this opportunity that anytime you guys have questions, just ask me right away. Just send it through. I literally have another screen that is open over here, watching for the questions. Okay, now let's move on from here. Okay, Tony, nice to see you tune in too. Nice and early, right? Our agenda for today, we're going to touch on a couple of key things, right? Swing highs, swing lows, right? How to do them correctly, right? Pullback, support, and resistance. If you have time, we try to look at trend lines. I'll be showing you some about the probability, how to improve the probability of your setups. Okay, I'll be showing you how to improve the probability of your setups after that. All right, now let's move on to the next one. When it comes to swing highs and swing lows, right? What you are looking for, right? What you're looking for is what I call significant swings. Okay, significant swings. So significant swings, when you're looking at a chart, right? Looking at a chart, you're looking for these levels which are very significant. Okay, because the more significant it is, the more effective it's going to be. Many times when people trade, right? They look at they see small little movements and they place too big of an emphasis on it. All right, they see small little movements and they place too big of an emphasis on it. What do I mean by that? Right, like this is what I mean. This is the wrong way, right? So you look at these small little movements and you place too much emphasis on the small little fluctuations, right? So this is an example of drawing support and resistance wrongly. Okay, this is an example of drawing support and resistance wrongly. You're placing too big an emphasis on the small, insignificant movements. And of course, I'll be touching this Fibonacci maybe in the next couple of webinars, right, where we're teaching you very advanced approaches to trading. But the important thing is that, right, when you draw swing highs and swing lows, what you're looking for is very significant levels, like you can see, significant movements. Now, I do want to show you, I do want to take this opportunity to maybe show you some examples here, okay? If you guys have happen to have a chart request you'd like me to take a look at, let me know. Maybe I can even analyze it live with you guys, right? But yeah, so let's just take a look at this, okay? I was looking at a big call on Bitcoin, but let me show you what I mean by a significant level. If you're looking at Bitcoin over here, okay, what are the significant levels we're looking at, right? We're looking at this. Oh, sorry. This is a nice significant level. This is pretty significant. This is not so much. This is a tiny movement over here, right? You got a big movement over here. You got a big movement over here. Got a big movement over here. Maybe you can consider this as a nice movement, but you can consider this nice movement coming down. So these are the key levels that I usually take a look at right away. When you have established these levels, then you can start drawing. I like to put like nice horizontal lines over there. So I put a nice line over here, right? I'll put a nice line over here, put a nice line over here, put a nice line probably over here. So you start highlighting the key levels first. Okay, start highlighting the key levels. And what do we notice is that, for example, here, very nice support level where price is revisiting, right? I will explain the psychology of this thing. Is called a pullback support that we're looking at. There's a certain psychology to it, which I'll be explaining to you in a moment, right? Nice to see you here, Gulam, right? There's a certain psychology to see on what this thing is called a pullback support. Okay, now this first and foremost, you need to look for these kind of significant levels to call to draw a support and resistance. Okay, you notice that when you change the different time frames, it starts to look, things get a little bit more granular, right? You can see this, right? You got this part over here, you got this part over here, this part over here, maybe this part, but okay, maybe not this part, right? But so these are the key levels that you're looking at. Look for significant levels. We are not going to place an emphasis on this movement here, this movement. These are not key levels, right? Look at this movement. It's not important. No one's going to look at these levels, and that's why it's not going to be that effective when you use them in trading. Nice to see you here, Benjamin. Right. So yeah, so this is the first thing that I want to let you know is that when you're trading, there we go. Look for the significant levels, okay? Look for the significant levels, okay? Ignore the insignificant ones, okay? There are a couple of, so when you find the significant levels, that is where there are the single swings they look at, right? So the thing about single swings is that they are not very strong, okay? So a single swing low over here, a single swing high over here. By themselves, they are not very strong. Okay, Natalia, maybe I'll take a look at gold in my next example, right? Yeah, that's significant. If it's just a single swing high or a single swing low, it is not going to be very strong. What you want to look out for, rather, is you want to look out for multiple swings, right? 1 swing, 2 swings, 3 swings, 4 swings. Man, that's a very nice level. Right, 4 of them lining up together, and what I like to do is I like to highlight it and becomes an area for you to look at. Can you see that? Right, I'm just going to erase it for you one more time. Right, how do I erase my drawings? Erase all in slide. Yes, there we go. Right, so it's always a case when you have 1 swing, you try to go further back and see how far back it can go, how far back it can go, how far back it can go. Don't worry if like you have the wick up here. You can see this is the wick up here. This is the wick up here. Don't worry if the price is not lining up at exactly at the same level. So sometimes people get too absorbed by looking at the exact level, right? The single price point, and they think that that has, support and resistance is based on a single price. The truth is support and resistance work based on areas, right? So in this case, you notice that once I draw that, I will highlight this area, right? You notice I highlight a big area there, right? So I highlight that is the area of support, that is the area of resistance we're looking at. Okay, so now let's see if you can take a example, a look maybe at gold, or maybe if you want, I like to look at the futures, but you can look at XAU USD, and we can look at gold over here. Is there any multiple swing high or swing lows you can look at right away? Right? Yes. Oops, right, one thing here. Give me a second. Okay. So I was just looking at something here. So this is a big an example of a nice big level, nice big swing high, right? Because why is it nice? Because there's one big level over here and there's another big level over here. Two major levels that you can look at. So the next thing you're going to ask me is, okay, so where's the support, right? So okay, that's a nice, so this is what I call fairly nice bounce, right? I would consider it as one bounce, but because in this example it bounced off at exactly the same spot, and this was another nice big bounce over here. This bounce, I'm not too keen of it. It's kind of small. I much prefer this bounce and this bounce over here, right? So a trick on identifying how significant a bounce is, how significant a swing high or swing low is actually to see how many bars to the left and how many bars to the right. Is it below off? So in this case, right, this is a major bounce, right? This case, right, the last time price revisited here, you can see is from here and then it keeps going on, right? This one is all the way on. You can see how such a swing level usually has a lot of bars on the right and on the left, on the right and on the left. In this case, right, if you have a small little swing high, swing low here, yeah, sure, on the right is great, but on the left, it very quickly breaks down. You can see it very quickly the levels get broken. So to tell whether a swing high or swing low is significant, usually you'll see how big, how much on the left and on the right is like clear space. All right. So in this case, right, for gold, we see that there's a really fairly nice support level over here, right? There's a nice support level. I'm going to put it in green, right? And that's the important thing that you need to take note of, right? So why price bounce off here was because, people saw that, it bounced up one, bounced up twice. It's coming down again, right? And that's why they are confident that you bounce up. The more levels that line up nicely in a horizontal level, the higher the chance that price is going to make, the stronger the support level, and hence the higher the chance is price is going to make a nice bounce. Okay, the higher the chance is price is going to make a nice bounce. So we have the support and resistance levels over here. Later I'll be showing you perhaps some of the trend lines I can look, because I don't want to dive too much into the different forms of analysis, but I can already see so-called a trend line here. You can see different kind of trend lines, potential breakout. This is a little bit more advanced form of analysis, right? So we could be seeing price come all the way down to here if it breaks this level over here. I will explain that to you later on how it works, because I do see overlap levels and pullback levels, which I will need to explain to you in this webinar before I touch on them. Otherwise, you'll be a little bit too confusing. Okay, now let's go back to this. All right, so multiple swings is effective. That is simple, right? Swing high, swing lows, multiple swings, easy stuff. Okay, what I do want to let you know is one of the strongest form of support and resistance is called the pullback. Okay, one of the strongest form of support and resistance is called the pullback. What is the pullback? Okay, this is the pullback. Let me explain to you the psychology of a pullback. Okay, psychology of a pullback. You got price. Okay, imagine price touch this level, it dropped once. Touch this level, it drops the second time. Touch this level, it drops the third time, right? And now price is over here. When price is over here, a lot of people are thinking that it will drop again, right? Because it makes sense. Price failed to break up once, failed to break up twice, failed to break up 3 times. Now it's back there. They're expecting it to drop down. The problem is that if price suddenly breaks up over here, it starts to go up. As you can see, you know, there was a breakout. Okay, there's a breakout. Price is going up, and those people, everyone who was short over here, meaning they were selling, everyone that was selling over here, they suddenly get taken for a ride, right? They get taken for a ride. It goes up, it goes up, it goes up, right? They start questioning the meaning of their life. They're like, oh man, I should have used a tighter stop loss, right? It's a terrible time now. You know, I'm suffering so much losses. It goes up, it goes up. You know, they start cursing their luck. They start thinking that, swear that they'll never trade again, until it reaches here. Then it starts reverse, right? So now there is some light at the end of the tunnel, right? They are still holding on to their short position over here, right? This is their short position, meaning that this is the selling position that they had previously. It starts going down, it starts going down, it starts going down, it starts going down, right? And, you know, all the while they're holding on to their trades, right? They are seeing light at the end of the tunnel. And when it reaches here, the initial level where price broke out from, what do you think they are going to do? What do you think most people are going to do? Are they going to hold on to their position, or are they going to close off their position? Okay, Kramer, I see that you have a question. I switched to line graph instead. Can I say yes, you know, looking at line graphs might work pretty well too, Kramer. We look at it in a bit, right? So when the teller say close the position, and that is exactly correct. You would close the position, right? You close the position, right? And you get out of this trade. You close this position and you get out of this trade. So when you close a position, a short trade, to close a short trade, you need to buy, right? You need to buy an equivalent position to close a short trade. So everyone who was short over here will start to buy, and that usually causes the initial bit of momentum to come in to cause the price to bounce up. That is why it's called the pullback support over here. Okay, it's one of my favorite, right? One of my favorite styles of trading. The pullback support is so effective, right? Once it comes back down to here, right? Price, everyone who has been freaking out since they've been short over here, they've been taken for a while, right? When it comes back to here, they finally close off their positions, and it gives that injection, right? It gives an injection of buy orders that come in fast and quick, that pushes price all the way up, right? And that is what I mean by the pullback support. Price is, where's my mouse, right? Price is essentially pulling back, right? It's pulling back to the support level. That's why it's called a pullback. And support, of course, means that it's below price. Now, people always get confused between the difference between support and resistance. Always remember, if you're a human being, right? Or what do I mean if you are a human being? Everyone here is a human being, right? You are standing on support. The floor is supporting your weight. The chair that you're sitting on is supporting your weight. You for something to support you, it needs to be, below you, right? You are supporting someone, you're holding the person, you're supporting them, right? So no one ever says that the floor is resisting my weight, right? If you think about it, it's very weird. The floor is supporting my weight, the chair is supporting my weight. So remember, support is always below you. Do not confuse this terminology, okay? The floor is supporting you. The resistance is when you push against something. Resistance is usually above you. The ceiling, you're pushing against the ceiling. You'll not say that, oh, the ceiling is supporting me. It sounds a bit funny when you say it that way, right? The ceiling is supporting me, right? But you're pushing against the ceiling. You're saying the ceiling, is resisting me. This thing is resisting me. You're pushing against something is resisting, right? So resistance is always above price, okay? Support is always below price. Important considerations that you need to take, okay? So the opposite is true when it comes to pullback resistance, right? Pullback resistance, you can see how price bounced once, price bounced twice, price bounced 3 times, right? It doesn't need to be 3 times. Usually once is good enough. One good swing low is good enough. I'll be showing you what I mean by that later. One good swing low is good enough, right? When price breaks it, right, there's a whole bunch of people who thought that it was going up. right? There's a whole bunch of people that thought that it was going up. Now it's dropping. They are being taken on one hell of a ride, right? They're like, oh shucks, man, price is dropping, it's terrible, man. You know, I should never have held on to the position. I should have closed it out. I should have used a stop loss, right? They start questioning the meaning of life, right? It goes low, and then it starts to turn around. When it starts to turn around and it starts coming back up to here, once again, once it reaches the entry, the level where it broke out from over here, as you can see, once it reaches the level where it broke out from, that is where they who were holding onto their buy positions, remember initially they were holding onto buy positions, they would be closing off their trades. To close off their trades, they would need to sell, right? Need to sell. When you sell, that's where price comes down, right? You have that nice bit of momentum, injection of selling orders that helps you push price lower. Okay. Now, this is an example of how it looks like, right? So we got a swing low. You can see a very nice significant level here, right? We highlight this as a main resistance level. Okay. I mean, you could line it up with Fibonacci. This is slightly more advanced where you can line it up with different stuff, right? And of course, let's just see. This is a second Fibonacci level. You can line it up. I will explain this later. This is how you can fine tune and give yourself very, very high probability setups. Let me see if this actually fast forwards into an example. You can see how price reaches this level, touches it, drops down. Okay, that is what you're looking for. Okay, sure. In this example, I show, right, just in this example, what I'm showing is that I show this resistance level over here. Over time, I'm going to show you how you can combine maybe a trend line channel. I'm going to show you how you can combine an Ichimoku cloud on top. I'm going to show you how to combine Fibonacci. I'm going to show you how to combine Fibonacci projections, right? I'm going to show you how to combine Fibonacci expansions, extensions, correlation, throw in a whole bunch of stuff, and you improve your chances of being profitable, right? That if you ask me, right? A lot of people ask me, is there a single best indicator? Is there a single best strategy that works very well? There isn't. In fact, it's what we call the confluence. You're looking for confluence over here. C-O-N. Confluence also means combination. Right? Well, my handwriting skills is terrible. I'm sorry. Right? You're looking for a combination of indicators to all agree that price is going in a certain direction. In this case, you know, I got the resistance, you know, I got the 61.8, I got 38.2, I got all the Fibonacci, all telling me that price is working out very nicely. Price might reverse from there. And that is how I know that I have a high probability trading setup. We'll learn more of that over time in the VIP room. Yes, for those of you guys who are here, I will share with you how you can get into the VIP room. The IronFX VIP room, which we are launching, is pretty fun. It's a pretty nice place to be. You will get direct access to me and my pool of prop traders. Very nice, because you get to ask some really nice questions. You can practice your technical analysis there, and I can teach you I can show you whether you're doing it right or doing it wrong. Okay. Now the next thing I want to show you, right? Next thing I want to show you is overlap support and overlap resistance. Okay. Bam. We are now here. Oh wait, let me see if I can show you. I'll show you an example of a pullback working very nicely. Okay. Let me see if I can show you an example of a pullback working nicely. Maybe let's toggle around a bit. Okay, let's go daily analysis. Okay, perfect example, guys. Perfect example over here. Now, Marky, your question that you can put there. Yes, closing. If you do line chart, it works well too. Right, this is the pullback that I was looking for. You look at candlestick, it works equally well. Right now, guys, let me show you what I mean by this pullback. Okay, we can agree, right? We can both agree that we have a very, very nice little bounce over here. This is a pretty significant bounce, right? It's a pretty significant bounce. Now we got price that's coming down here, price that's coming down to here. When it reaches down to here, what do you expect is going to happen? Price might bounce up from here, right? Everyone is thinking, yeah, you know, Last time price went down there, it bounced up pretty strongly. It's probably going to happen again. Okay, so we have price going down, down, down. It's down there. What happens? Holy smokes, it breaks. Okay, it breaks. People who are long, they start panicking, right? They start panicking, and now you can see price going down. What is happening to the people who got into a long position over here? What is happening to the people who got into a long position over here? They are freaking out, right? They are freaking out. They are thinking that, oh man, I thought the bounce was going to happen, right? I mean, everything pointed, that the signs were all saying that price was going to bounce here. But the moment this happened, price came down to here. They're holding on to their long positions, right? So remember, they're holding on to their long positions now. And of course, they are freaking out. What we do as good traders is that when people panic, we stay calm. Okay, people panic, we stay calm. What happens after that? Okay, what happens after that? Just let me erase my drawings a bit. Whoa, I draw a lot on this chart. What happens after that is that price, then you can see, okay, nice, one strong bar that spikes up to here. Now, what do you think people are going to do in this circumstance? The moment they see this, people are freaking out and they're getting out of their position, right? Then you can see almost in the next bar. Can you see that? In the next bar, this is how intense the selling can be sometimes. In the next bar, everyone who was long over here, they just freaked out and they sold and they got rid of everything. Maybe I can show you on the 4-hour chart. It might look slightly easier, right? So I'm going to go back to here. Right, remember this is a, this is a nice swing low support, as you can see over here. The moment price breaks out, bam, bam, down, 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 it goes up, comes back up to here, right? Everyone who was short, who was long, thinking that price might bounce from here, they get out of their trade, right? They get out of their trade, and it causes prices to just plummet once again. Okay, plummet once again. How strong is such a pullback? Usually, look at this, right? It goes down, it gets, people get out of the trade, and this is where you make the money. This is where you make the money. When people are panic selling over here, you start to short and you start to make some money. Okay, you start to short and you start to make some money. All right, if you guys got questions on this approach, please send it through so I know I can answer them. Yeah, but this, you will see this happen a lot in varying degrees. Okay, let me show you another shorter term example. Just this move over here, right? Just this move over here, this level over here. Replay, I'm going to show it up, replay feature over here. Can see that price, bounce up nicely. It's a pretty significant bounce. Price is now breaking it. Right, breaking it, breaking down, 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 down. Man, the people who are long over here are being taken for one hell of a ride, right? Being taken for one hell of a ride. Now, then what happens when price? Look at it. Can you see that? It shoots up one touch, right? And it usually drops very strong. There's even another spike up here. Right, and people are still freaking out. These were for the slightly later comers, the second spike. But I can see how people freak out and people close the trade pretty fast. The important thing, right, is identifying this nice swing. The more you can identify this, the more accurate you can identify this swing, the more accurate your reversals can be, your pullback resistance and pullback support can be. Okay, it's pretty fun, right? Honestly, it's pretty fun. It's a really, really great way to trade. In this example, other things that I would have considered, right? I would have considered maybe a trend line breakout, right? Breakout pullback. I might have considered Fibonacci retracement. Notice how price react off the 38% Fibonacci retracement perfectly. Many different ways that you can really improve your technical analysis, right? Your style of trading, your probability of your trades being correct. And that is where, what I'm teaching you today is only theory, right? The value comes when you practice it, guys. Always be practicing. How do you, I'm just going to interrupt this session right here to send you to a particular link. The link is vip.ironfx.com. This is the link that you want to go to, right? It's the IronFX VIP trading room run by me, run by my fellow prop traders. It's as long as you have an IronFX account, you will get access to this room, right? As long as you have an IronFX account, you get access to this room. And let me show you the beautiful thing here, right? So for example, Natalia, right? You might be looking, right, at gold. If you have a question on gold, you can come in here and you can speak to me directly, right? Maybe this is a 5-minute chart. Let's just say you're on the 1 hour chart, right? You're on the 1 hour chart and you see this like overlap resistance over here. Let me see. Actually, you see this overlap resistance that comes all the way back to here. You can come in here and you can go, hey Desmond, right? What do you think of this resistance? What resistance am I referring to? I just need to highlight the text that I just drew. I can click this little button called link object to text. Click on it. I can just click the object that I just drew, right? I can click on this one over here. You notice that it lights up. And I click confirm. So when you send the message through, right, how it looks like, right? So I'm looking at a message like, oh, wow, someone has just mentioned me over here. Hey, Desmond, what do you think of this resistance? What resistance are you referring to? I can hover my mouse over it and you can see it lights up exactly on the chart. So this is where you can practice your analysis. You can ask me questions very clearly. I can jump in over here. I say, okay, so this is the resistance level that you're looking at. Well, it happens maybe. It's not a 30%. Sorry. I might wait for the 38% retracement, right? So same thing, I can highlight 38% retracement and link it. I know it's a little bit hard to see, but I can link it there. And you're like, oh, what is Desmond referring to? What 38% retracement? You hover your mouse over it, it's like, oh, he's referring to this Fibonacci retracement, right? So this is a great place for you to practice your analysis. We have forex, we got commodities, we got indices. We'll be adding in crypto, right? All the different kind of charts will be here. And anytime you have a question, just go in, ping me, and practice your trading. Okay, you might be looking at this and you're like, hey Desmond, is this a double bottom? Right? What's a double bottom looking at? Is this like is this a double bottom kind of formation that we're looking at? Same thing, highlight, link object to text, just select whatever you just drew and you send it through, right? Because when I look at it, I'm like, what is the double bottom you're referring to? Hover my mouse over it. Oh yeah, it kind of looks like a double bottom. Then I can, we can guide you, say, yep, it looks like a double bottom. Price might bounce up to this level over here. You can take your profit there. If you do this well, you can be this is what IronFX has done to get the VIP room here. It's not easy, right? The very fact that you can get, I believe it's a limited time promotion that just being able to have as long as you have an IronFX account, you will get access to here, right? That is something that I don't think the promotion will last for a long time, right? What you need to know is that when you are in the IronFX room, I'm going to show you, right? Some people might be a little bit confused because when you come into here, right? I'm just going to show you, you will be in this thing called a preview mode, okay? In the preview mode, you just need to click on join IronFX server, register. I'm going to show you really quickly. Let me see if I can just register something really quick over here for the tree. I think we have enabled registration. You need to agree to the disclaimers, right? You join the server. Now, when you join, you notice that there are no channels on the site. What you need to do is to click on this thing called request access, all right? This key thing over here. Click on request access. Please attach proof of your IronFX live account to get access. You just need to click request to join channel, right? Let me in, right? Maybe you just need to say message, let me in. You attach a screenshot of your account. Let's just say I'm going to attach a screenshot of, let me just attach a screenshot, a random screenshot. but maybe of course the screenshot of your IronFX account. You send in the request, right? Then we tell you that your request is pending approval. I will come in here. I will see your request. All right, you know, we got Desmond requesting, okay? He has attached the relevant proof, accept him. And I'll give you like a gold here. And it's done. And when that is done, how it looks like is that you will then have access to all the different channels. Very simple, right? And we have some little congratulations. We teach you a little bit of stuff on how to link stuff over here. And there we go, right? It's a really easy way, right? It's a really easy way to get you to get in, all right? Now, I don't want to deviate too much from our original explanations, but my one bit of advice, if I can, is that, you know, this is a very limited time promotion that IronFX is running. If you have an account, if you don't have an account, go register for one, right? But if you have one, just come in here, request access to join and lock in your position, because I think sooner or later they might be increasing the requirement just to get access to it. So once you lock in your position, lock in your entry into this VIP room, right? That'll be great. Okay, now let's go back. One thing I want to teach you guys, next thing is the overlap. So previously we were talking about pullback. Now we're going to talk about overlap. Okay, what exactly is overlap? Now what exactly is overlap? Overlap is what happens when price bounces from a pullback. So remember, we have a nice big resistance over here, right? Price breaks out. When it finally pulls back, it pulls back here. When the pullback bounces, it becomes an overlap. Okay, when the pullback bounces over here, it becomes an overlap. Got it? So that means price has respected one time from the bottom and one time from the top. Overlaps are really good because you see in this example, we got a nice reaction here. We got a nice reaction here. This is then an overlap, right? These overlaps are very useful because whenever price reaches it again, it usually, right? It usually reverses, right? As you can see, it usually reverses over here. Bam, it goes down nicely. Okay, overlaps are a great way to trade. It's one of my favorite ways to trade. And I'll be showing you, we'll be practicing a little bit together to see how we can identify overlaps. Okay, then we come in over here, we go into the charts. One thing which I wanted to show you guys is actually on gold, right? So I think it was XAU USD. Natalia was asking, right? Let's see it over here. Overlap. An overlap level that you can look at. In this example, there's this overlap that you can look at. Okay, you will notice how price reacted very nicely. Oh, sorry. Reacted very nicely one time from here, you know, and then it bounced very nicely one time from here. And then, you know, you can see that when price went through, it touched, it go down, it went up, it go down, it went up, it go down, it went up, it go down, right? Because it's an overlap resistance. Overlap levels are very good, but only if you know how to identify them properly. Okay, overlap levels are amazing, but yeah, the important thing is that you need to be able to identify them properly. Okay. So Natalia's asking, right, just in terms of analyzing gold, what do we expect on gold? Okay, what do we expect on gold, right? Let me see. I like to put rate as resistance. So I'm going to put this as a resistance area. This is as a support level. A little bit of a trend line breakout over here. Could it be a bit of a channel? Maybe we got a little bit of a channel over here. Descending channel. Yep, we got something like a descending channel over here. Okay, what is the Ichimoku telling us? Ichimoku is telling us that we got a little bit of bearish pressure pushing prices down. My bias, right? My bias is that this is the key level that needs to be broken. This is the key level that needs to be broken. If prices breaks this level, right, I would trigger a sell entry. Maybe I will consider a sell entry to push prices maybe all the way down to here, to a next key support level. But this level needs to be broken first to trigger the move down. Of course, guys, remember, this is not trading advice. right? This is not a trading recommendation, but my analysis on this is that what you definitely need this level to be broken first. With the bearish channel that is pushing prices down, with the bearish Ichimoku cloud that is pushing prices down, right? You should be able to have prices being pushed all the way down to the 1678 level, but only if prices close below the 1788 level. Okay, guys, we'll be taking some time to go through some analysis, some examples, right? If there are particular instruments you want me to look at, let me know, right? So whether it's gold, whether it's oil, whether it's silver, euro dollar, right? Let me know if there are any particular charts that you want me to look at. I'm just going to take this chance to show you a couple of instruments, right? And maybe I can to show you how overlap support, overlap resistance works. Okay. You can see over here that this is a very nice pullback turn overlap. Okay. Now let me show you the replay. Look at this. Price bounce off once, bounce off twice. Very nice. What do we say when this happens? When this happens, people are thinking that prices is going up, right? People are thinking that it's going up, right? Just give me a second. Yeah, people think that it's going up. All right. Now, when prices break and it starts to go down, yeah, that's where people start freaking out a bit, right? People start freaking out. It goes down, but it comes back up. Okay, amazing. It's back up. And what happens? This is then what we call a pullback resistance, right? Remember, once prices break out from here and it comes back up to here, this is what we call a pullback resistance. We expect prices to go down from there, right? What happens? Yeah, it comes back up. Yeah, bam, it goes down, it goes down, it goes down. Okay, so this is the pullback resistance that we're looking at. Now that this resistance happened, it is now called an overlap, right? It's now called overlap resistance. Key level to look out for, right? I mean, we go on and we go on and we go on. So I have no idea when it comes back to retest it again, right? I think it might be retesting it soon. Whoa, it's a long time. I need to click on it so much. Okay, it's coming back up to retest it. Let's see, let's see. Yeah, I think it retested it this area over here because of this spike, right? So it retested this area. It goes down again. This is the overlap resistance that you can see in action over here, right? Very nice move. Okay, let me just cancel the bar replay. You can see this was the overlap, and then it comes back up to here again. Same thing, overlap resistance we're looking at, right? Touch it and then reverse. Very, very effective. Okay, this kind of setups are very, very effective, right? And I want you to train your eye to be able to see it, right? I want you to train your eye to be able to see it, because first and foremost, when it comes to trading, support and resistance, right, it stands almost as one of the strongest things that you can use, right? In our next session, I'll be teaching you trend lines. I'll be teaching you trend lines. I'll be teaching you channels. I'll be teaching you how you can improve the probability of your setups being correct. Okay, you can improve the probability of your setups being correct. Let me see if I have an example where I can show you what it means by improving the probability of your setups. Okay, let's just say we have a resistance level over here, right? This is what I'm going to teach you guys next. Let's say I have a resistance level over here, right? This is the overlap resistance that we have identified. Usually in my trading, now guys, trading is not binary. Trading is not 0, 1, meaning 0 means you don't take a trade, 1 means you take a trade. This is not what trading is like. Trading is 0, 1, or 2, or 3, or 4, or 5, right? So do I risk, how much should I risk on a trade? Well, it's not 1 to 5%, but is, do I have 1? Are there 2 checkboxes, 3 checkboxes, 4 checkboxes, 5 checkboxes? How many checkboxes are there to suggest that it's a good trade? Okay, the more checkboxes. So maybe if I have 5 checkboxes or 4 checkboxes, I might risk like 2% of my trade, right? If I have 2 checkboxes, maybe I risk 1% of my trade, right? So it's about finding how nice a setup it is. Okay, if I have 1 checkbox, maybe I risk 0% of my trade. Okay, so just remember we have a checkbox system over here. Okay, let me just erase everything and draw this thing over here. Let me show you what it means to be like let me just see resistance area over here. We got we got a resistance area over here. Okay, now let's have different checkboxes by the side over here. Okay, let's see how nice this setup might have been. Okay, we got 1 checkbox, right? We got 2 checkbox, we got 3 checkboxes, and I'll explain to you what they mean later. Okay, overlap resistance is 1 checkbox. I call it overlap, right? Excuse my terrible writing. We got overlap resistance. Next thing, I draw a Fibonacci retracement. Maybe I do a 1273. 127%. I know you can't really see it, but 127% is another is a Fibonacci level. I have another checkbox over here. I'll do another Fibonacci retracement all the way from the top all the way down, right? I pull up the template. Maybe I have 61.8% that is slightly higher. Not that effective, but it's fine. I have there we go. I know you can't really see it. I'm going to erase this, but there is a negative 27% that is over here. So we got negative 27. That's great. 3 checkboxes. And the last one, maybe you take a Fibonacci. I know I'm using a lot of Fibonacci here. I'll teach you guys how to use it in a bit, right? And I noticed that the 100% projection is over there. So I got the 100% projection. I got 4 of it. 4 of it, if I got 4 ticks, maybe I'm risking 2% of my entire account on this trade. Okay, we see prices go up, 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 up. So we got the whole area over here as a confluence area, right? It comes up, it touches it, right? And then it goes all the way down. So that is how you get into a high probability trade. You don't just trade one thing by itself, right? You don't just trade one thing by itself. I believe you might have been able to use a trend line. Trend line wouldn't have touched it, it's fine, right? But you can see that when it comes to trading, you need to see what is the good levels that you're seeing over here. The more, the better. Okay, the more, the better. And I'll be showing you how to, today I've shown you how to use the overlap and the pullback. Over time, I'll be showing you the Fibonacci extensions, the Fibonacci retracements, the Fibonacci projections. I'll be showing you how to use the trend lines. I'll be showing you how to use channels. I'll be showing you how to use Ichimoku. I'll be showing you how to use indicators like the stochastic, maybe look for divergence over here, right? I'll be showing you a lot of things on how to be a better trader over time, right? It's actually pretty exciting because when you know how to do this right, you, like I say, guys, it's a matter of even financial freedom, right? If you know how to trade profitably, you are literally printing money out of thin air. Okay, literally printing money out of thin air.
My name is Christina, and today we will talk about dead cat bounce. One of the popular terms that traders often use is dead cat bounce. The term comes from an old saying in investing: even if a dead cat will bounce if it's dropped from high enough. The expression describes a situation where a security has a short-lived burst for an upward movement in a declining trend. It is a temporary rally in the price of a security after a major correction or downward trend. A dead cat bounce is very difficult for analysts and traders to predict. It begins with a downward move followed by significant price recovery. However, after some time the price doesn't rise anymore and the downward trend continues, falling even further. Because of this, traders sometimes open long position and hope for a trend reversal, which never happens, falling into what is called a bull trap. In order to explain when a dead cat bounce happens, it is good to look at an example. Let's say there is a security name X price at RS10. In the past 7 weeks, the security has been declining and its price fell to R2 level. In the 8th week, the stock rises and goes to RS3, but the following week it falls again to RS1. On reflection, the jump in the price in the 8th week will be termed as dead cat bounce. Dead cat bounce is pricing pattern used by stock analysts to determine whether a rise in the price of stock after a major correction is a reversal of the decline or just a dead cat bounce, a temporary bounce back of the price. Dead cat bounces are usually observed in retrospection, as it's very difficult for traders to detect them from a simple trend reversal. More often than not, such a sudden increase can be caused due to bargain buying by traders and investors who may mistake the bottom of the stock price. Short-term traders can take advantage of a dead cat bounce and make profits from the short rally. Stay tuned for more interesting and useful market terms.